Hello. Good morning, team. Having some technical difficulties today. You might notice the camera blinking on and off. Not quite sure what's going on. Tried to restart my computer. It all happened literally 1 minute before I was meant to go live. Anyway, we'll get on with it. It's not a special effect, by the way. The blinking on and off. It's a little bit of a glitch. But anyway, we won't worry about that. Hey, good morning to all of you. Good to see you virtually or in one way, shape or form. Alison, Niraj, Hardik, Laura, Michelle, Bob, Nick. Hey, good morning to you guys. Great to have you on again this morning. Another Wealth Coffee Chat. Welcome along. If anyone's new, if you're new, give us a shout out in the chat. Say hello. Let us know where you're from. If you didn't already know, Jason Whitten is my name. And each morning, get together with some pretty cool people who are in the world of property investing as part of their wealth journey. And we talk shop. We talk investing. We talk ideas. We talk motivation. We talk momentum. We talk madness. Sometimes over a cup of coffee in the morning. But hey, Ben, good morning. How you going? Yes, my love, Shay. Not quite sure what is going on. I've restarted. I've done everything. I've replugged in, but there you go. Anyway, technology is awesome when it works and very annoying when it doesn't. But today, if we can make it work, I was going to talk about something that's pretty interesting. That's something that's out there in the marketplace right now, or has happened in the last couple of years, is a flood, a huge amount of value and capital entering the market. And, often I've had a few messages from some of you guys going, oh, what next? What do I do? And wanted to sort of maybe take some time this morning just to quickly chat about that. If we can pull it off with the tech, let's see how we go. But let's just zoom in on this. Little bit of a snapshot. Australian investors deployed a record amount of capital, $35.7 billion into the market in 2021. Flood of capital. Record, folks, into fixed income and real estate products. Why is that? What's going on here? What's happening, ladies and gents, when it comes to the marketplace and what's going on? Maybe chuck it in the chat if you think, hey, why is so much money pouring into these products, fixed income and real estate products? You tell me right now where that money might have come from, because it's an interesting conversation going on. Where is this money and cash and wealth and capital come from, and what's it doing? And why is there a record amount of money being deployed, floating around in these marketplaces? Because it's interesting for us as property investors. We need to understand what's going on with money and cash floating around in the marketplace, and make a strategy, a plan to make sure that when we're investing, we understand what's going on. And I can tell you right now, in this space here, when we look at the market, when we look at the world of money, these fixed income assets and real estate products, people are chasing income. Retirees are chasing income. Investors are chasing income. And it's moving out of places and spaces which used to be pretty good. I don't know if you guys have heard, if you're around last year when Andy Fenton and I talked about defensive assets in the terms of financial planning and other things. Defensive assets used to be bonds and cash positions and stuff like that. And well, underlying inflation at the moment is not normal, regular everyday inflation. It's because of supply chain constraints and whatever. But if you've got cash in the bank and what are you getting for it? Tell me in the chat, what the interest return you're getting for money in the bank, letting the bank look after your cash, which commonly known as a losings account, by the way, folks. Losings account. You got $1 million in cash in the bank, or even $10,000 or $100,000 or whatever it is. you're not getting anything for it. You're getting less than 0.5%. And inflation, is a lot higher at the moment, but, 2-3%, you're going backwards in value. And that's why money, record amounts of capital, $35 billion, matter of fact, is being now deployed into the marketplace. And what's that doing? What's that doing for us as property investors? Well, it's certainly making the value of real estate do some interesting things. For those who are in the world of property investing, and if you own a bit of real estate right now, and you have done for the last couple of years, almost every property has had some positive benefit in the last little while because of the marketplace, because of challenges, issues that have the wind at our sails as property investors, giving our property values a rise. Challenge is, I just got off the phone just a moment ago, chatting with Andy Fenton, very good wealth advisor, and he and I were talking about rich poor people, and chuck it in the chat and tell me right now if you feel this way, or someone who's like this. Your property values have gone up. Let's say, for example, your property values have gone up $200,000 or $500,000 or $1 million in the last 2 years. And you're like, woohoo, living the dream. I'm now killing it when it comes to my paper value. But where is my access to cash? Okay. Commonly known in the world of investing, liquidity. Am I meant to put a U somewhere else? Liquidity. Anyway, that it doesn't look right, but tell me if I spelt it right, team. But liquidity, the ability for you as an investor to access your capital and keep it moving. And you think you've got wealthier, ladies and gentlemen. You think, hey, beautiful. My values have gone up. But who's got wealthier? Who's book value? Who uses the asset when you can't get access to your cash when it comes to real estate? Tell me in the chat. Get active here, team. Tell me in the chat who your real estate portfolio has gone up. I don't know, 200, whatever. Liquidity. Yeah, there you go. I think I spelt it all right. Thanks, Nick. Just looked a bit strange. Who's benefiting from your property values going up? Bank. Boom. Exactly. Ladies and gents, the bank is killing it. You think you're wealthy, but you're not. You're not. Because, and we've talked about this before in other Wealth Coffee Chats, and I'm sure this is going to be a recurring theme. There are going to be a lot of paper, wealthier people. They're the good old banks, yep. Hey, Stu, how are you, brother? The banks, their book value, their underlying asset value, because they have a mortgage on your property, and most people, maybe, hopefully the lot of you guys listening in have listened to how to structure your finances as best as possible, but they have the mortgage and they use your asset for securing other funding for themselves to make themselves more money. So your equity's gone up. You can't use it. They won't lend you any money because you can't service and all this bullshit. And they're borrowing money using your assets as security so they can then lend more money to other people. And what's going on right now, folks? The big run for everyone to fix their interest rates, and that actually often works in the favor of the banks if it's not done properly either. Anyway, today we're talking about what is all this value and what is all this money floating around. What's that? How do we approach, let's say, the start of 2022? How do we think about investing? Because, maybe something that was, you could have bought last year for 500, 600, maybe this year it's going to be, 600, 700. And then your mind's starting to boom. Oh, like, what do I do here? There's a few conversations for us to have, team. So let's have a quick chat about those. And over the coming weeks, I'm going to drill into these a little bit more. But one of those conversations is the proximity for profit, okay? For profit. And you guys may have seen this one as we've done some chats if you're in our coaching or our mentoring program. And, hate to say I told you so, folks, but, when myself and Sam have seen this stuff play out, we saw it play out in Sydney, all right? 10, 15 years ago, for a budget of $500,000, you could have been investing in pretty sweet locations in Sydney. Now, with a budget of $500,000, you're a million miles away. And, there's, if you put it in context, it might go from 500 to 700 when it comes to those timeframes. But, let's have a think about what that might mean to us as investors. What's going to happen in 2022 is we will need to venture further from certain locations for the required budget constraint. So let's say you are investing and you've got a $600,000 borrowing capacity. This camera going on and off is a little bit annoying, isn't it? But anyway, we will continue, team. And maybe even I'll turn it off. It's a pain in the ass, I think. Let's see what happens here. Anyway, can't even turn it off right now. Okay, so you might need to venture further away from a desired piece of infrastructure, a desired location. You might now go from 20K from the CBD to 30K from the CBD for that price point. You want to keep your quality high on the real estate space. You don't want to drop the desired quality and style and value proposition when it comes to your real estate. Sam's going to be talking about that, team, when it comes this mentoring. He's going to be talking about if we are going to move location, which is a bit of a distance maneuver for budget value. Don't drop, just because you move location, don't drop your quality of your real estate. We're going to talk about that because you don't want to end up with average real estate, no matter where you invest. But that's not what I'm talking about today. But the idea, what's going to happen over the next few years, we may have a bit of a movement in location for price adjustments. And that's okay. That's perfectly fine. That is normal. That is not abnormal. That's not the end of the world. And I've got a few people that are talking to me about, I'm going to hang around and wait for the crash. Good luck for that. I've heard that one 1,000 times. I'm going to wait for the crash and then I'll buy. You know what happens what happens in the crash or the pretend crash? When things adjust, which are normal, we have values that go up, probably overshoot, and then they adjust. And this section here, down in that section, which is called the risk zone, you can't get your equity. You can't buy anyway. It's a funny one. But anyway, that's not today's conversation. Might put that on the radar, actually. That's probably worth a good chat. So we might be moving locations. We might be moving proximity zones, but that's not the end of the world. But the main thing for me and the main thing for you is what I wanted to chat about today, is that we have a look at, ladies and gents, the income, the rental yields based on thinking about where we might invest, okay? Where we might invest. And this is a starting point. There's many other machinations of making good decisions. But we're saying, all right, well, all this money's flooding in. When lots of money's available, the returns often are compressed a little. Where do we invest? What do we do now? And then let's go back to basics. Let's look at fundamentals, okay? Now, this is all dwellings, and it's not a great specific thing, but it's just a general conversation. can you see when I'm talking about the compression of the yield? And it can happen in two ways, right? See how from 12 months ago, most places have had it was higher 12 months ago and it's lower now. Okay, that's what's called yield compression, ladies and gents. And you look at the idea of one, yield compression can because values go up, so property values go up, and sometimes rents go down, and that can happen. Got to keep an eye on what that might mean. But for me, right now, we're looking at places. We're going, all right, where are we going to invest and what's on the radar? Obviously, right now, Brisbane is hot to trot. It's on everyone's radar, okay? Everyone's radar, and it should be. It's good value. It's still quite high yield, and it's still good purchasing price, good purchasing value when it comes to the average prices in comparison to other states. No, as a no-brainer. The other one that's on the radar for many, and people can be a bit confused about it because the yield's so low, is Melbourne. Now, you can still buy very well in Melbourne, proximity-wise, for the money and the value, but the rental yield is a little bit more compressed. I've been saying this for quite a while, and we're already seeing it, folks. We're already seeing Melbourne's rents recovering. It got hit the most. So we're talking about that. Yeah, have a look at Darwin. Have a look at Darwin, Bob. Don't buy in Darwin, you lot. Jeez. Like, Bob, I know it's a big no-no, though. Darwin's rubbish. and that's no offense to anyone in Darwin, but just don't buy in Darwin, all right? Economically, it's a country town, all right? Oh, we got these crypto spammers again. We need to block these buggers. Anyway, one of the team will do that, I think, when we get a chance. So, when it comes to what do we do now? Where are we, team? Having a look at the future, is it over? Blah, blah, blah. The answer is no, right? What do we look at? We look at our basic things. Where's our yield? Our access to lending. Is there value propositions in buying? The answer is yes. And we got to make sure this is in our long-term plan, because at the end of the day, if you're starting now or you're partway through the acquisition phase and you got property number 2 or property number 3, but you still got to keep going, you have to purchase wisely and smartly, irrelevant of the marketplace, because I can tell you right now, getting the acquisition phase done as quickly and as efficiently as possible is the point. It's the point, team, rather than to wait for a crash to get a bargain. That's just a stupid idea. It's a stupid idea, right? And in real estate, investing for the strategy for long-term wealth, it's a completely irrelevant conversation, okay? Because you're going to be buying over a 3 to 7 year period in acquisition anyway, and it's going to have different versions of the world at different times in different states and all those sorts of things. So hope that makes sense. There's a lot of money around. There's record values around for us as property investors. Let's keep our heads screwed on tight and look at the basics. Are we getting a good yield? Can we get access to lending? Can we still value buy in the right locations? And does it fit our long-term plan? And the answer is yes. It all works. In comparison to your long-term plan, it works. It's perfectly fine. Let's keep it going. Let's keep going and making sure our acquisition plan gets done and gets delivered on. All right, team. Sorry about the late start today. Hopefully, I'll fix a few of my little tech issues, and we can hang out tomorrow for another Wealth Coffee chat, without the blinking and the flashing of the cameras. Anyway, let's see if we can get that done. That's it from me. I'm just rabbiting on now. You guys be awesome, be well, and give us a shout out in the chat if you've got any subjects that we need to cover early in the year. I've got a few lined up, but let's see how we go. Thanks, team. Allison, we need some super fast trains to speed up where we can live. I think you're dead right, Allison. Australia, first we need some people. I think we need some people, Allison. But I'm going to talk about that one in the coming days as well. All right, you guys stay well. Enjoy your day. Come join me tomorrow around about 8:10. Well, at 8:10. Hopefully I can start it on time tomorrow with no tech issues. There you go. Furnished versus unfurnished. I like that one, Michelle. On my radar. I'll make a note of that one right now. All right, team. Thank you. Good to see you. Have a great day. Adios. Bye.